Good morning. This is Larry McMillan with the stock market update on Monday, May 19th. Well, last week the market continued to edge higher and things are looking more bullish. We had said last week that we had a long-term or longer-term buy signal in the form of the differential between implied and historical volatility. Now we've gotten another long-term buy signal based on what's called cumulative volume breadth. In other words, every day you add the volume on advancing stocks and then subtract the volume on declining stocks, keep a running total of that. That just made a new all-time high. When that happens, S&P usually follows. So that would indicate that S&P is now headed for the all-time highs at 6150 or so. And therefore we're taking positions based in line with that. The SPX chart itself has turned somewhat bullish after last week's action, or actually 2 weeks ago, and we have support of 5,700 and 5,800. If we fall back below 5,700, that would be somewhat negative, although not necessarily a total rally killer. Equity-only put-call ratios continue to decline sharply, and that's positive for stocks. There was a lot of call buying on Friday. If that gets excessive, then it's going to be a problem. But right now, it's just a trend, and the trend for stocks is up, and the trend for put-call ratios is down. They're a staccato indicator. Breadth has continued to be positive, so our breadth oscillators are still on buy signals as well. The other indicators that we have, though, are mostly in a neutral status. The new highs versus new lows, that's still hovering in no man's land. We're not seeing enough new highs to generate a new buy signal, nor enough new lows to generate a new sell signal. So that indicator is neutral. VIX itself is also neutral. There's no operative signals at this time. VIX has declined from its highs. And I keep reading about this as a record decline, etc., etc. I'm not sure that's important. But we're down below 19, which is below the 200-day moving average. So right now we don't have a trend of VIX signal. And we also don't have a spike peak buy signal because the last one of those has expired now. So it touched 17 on Friday, which was the low in March, and then from there it bounced much higher. So if we were to bounce back above the 200-day moving average on VIX, that would be negative for stocks. But otherwise, we're not seeing any indication from here at all. Meanwhile, the construct of volatility derivatives, which is the slope of the term structure of the VIX futures, and the CBOE volatility indices, that's positive, that's bullish, and so that indicator's moved back on the positive side of the ledger. So overall, we don't really have any sell signals. We have a few neutral indicators, but the rest are bullish. And as I said, we have those two longer-term buy signals in place. So we are continuing to add positions in line with any new signals that we get. And meanwhile, we will continue to take profits on deeply in the money options. I invite you to visit our website. We're running some specials on some of our products right now. And otherwise, have a great week trading.